Hey everybody, this is Ryan Mallory. Thanks for checking in on my YouTube channel here. And I want to talk today about market crashes and Trump tweets because, man, this is some really hard stuff that we're having to deal with in the stock market right now. Regardless of what political aisle you're on, what you believe, who you voted for, it doesn't make a difference, man. When you're getting tweets and it's driving the markets 400, 500, 600 points lower, it makes it really hard to trade. And so, politics aside, because that's not what this thing is about. This is really just about how to still profit in the stock market when you have somebody that's tweeting that's driving prices instantly lower with literally 280 characters or less. So let's talk about it. Let's figure out how to handle this going forward. Right now, I'm actually long on QID, which is a 2-to-1 inverse ETF of NASDAQ. So I'm up pretty good on it. But I'm also down on Starbucks right now because if you look at SBUX, it's down. It's not doing good today. But the gains that I'm getting out of QID is more than balancing that out. So look, Starbucks, it's probably going to have to be dumped before the close today. It's not looking very good. Maybe I'll hold on to see if we can get some kind of bounce out of it on Monday. I'm just not really sure just yet. But technically, it's not looking good when it's breaking through the 20, the 10, and the 5-day moving averages. And the 20-day has been pretty solid for it up until today. But QID, which I'm long in, you can see I'm doing fantastic in it, really. I mean, so I'm not using this video to be upset about the Trump tweets. Actually, it's provided a great trading opportunity for me, and it's been great for me for the whole month of August. For the month of August, the market's down like 3 or 4%. It's probably actually more than that. I'm actually up a good chunk of change. So I've got no issues with it, really, but I know there's a lot of traders out there that are having issues with it and need to figure out how do I preserve capital in this kind of market? Well, you're not going to be able to predict when Trump's tweets come out. I mean, look at today. The market was down because of the trade tariffs with China. You had China that was going to impose some more tariffs on some of our goods. Market's down 20 points. But then you had the Jackson Hole, and that's really what everybody was looking for today to either drive the market higher or lower. Well, once the Jackson Hole came and went, the market started creeping higher. We were actually trading in the green, and everything looked all well by the dip, and the market was going to keep going higher. Maybe we'd finish 20 or 30 points higher on the day. But then a Trump tweet came out, and it said, our country has lost stupidly trillions of dollars with China. Okay, whatever. Not anything big there. But then he goes on to say, we don't need China. Okay, that's going to drive the markets lower. Next one says, we're better off without them. And he talks about intellectual property. Look, those are all good things to talk about and to try and address. Don't think that waging this tariff war on Twitter is the best thing for the financial markets because, look, you don't like what he's doing today. You don't like the move that he made. Yeah, it kind of surprised me that he's doing that too. So you would think that, okay, maybe there was some goodwill building there. We were making some progress, but no. It's like anything with this whole trade war, man. It's just this big circle loop. You know, we keep winning the trade war. We keep losing the trade war. We keep winning, losing, whatever. Okay, this is where we're at now. Market's diving lower. And then what was this? The other tweet says, we're better off without them, blah, blah, blah. We talked about that. And then he tells FedEx, UPS, Amazon, and the United States Postal Service to search for and refuse any shipments of fentanyl. I don't know how much that has a stake in the stock market. Just trying to say, let's move on from China. Let's not use them anymore. That's hard. And then he hereby orders companies to stop doing any kind of business in China. I don't think you can really do that as president. You can't say, hey, stop doing it. So it's just creating chaos in the market. It really is. I mean, there's a reason why we're down this much today. You just can't do that. So then he goes on to say, who's the bigger enemy? Jay Power or Chairman Xi? Holy cow. That's not good either. I mean, you're going to create a lot of turmoil for these markets. So the market sold off a lot. We have decliners of more than like 8-to-1 today against the advancers. This is crazy stuff. And you pull up the S&P 500. Let's talk about where I think this market's going to be going, where I think it could be headed here going into next week. This candle today on the S&P 500 does not bode well for the market. We keep getting rejected at this 50-day moving average. That's from a technical side. But then you also have the 20, the 5, and the 10-day moving averages all getting broken today. And you're setting up for a test of the 200-day moving average. But more importantly, we have this 3-week range that we've been stuck in, right? And it's just made it very difficult. And a lot of this is from tweets, from developments in the trade war. issues with the FOMC and Trump butting heads. I mean, there's a lot of this stuff. You know, we could open up on Monday. We could be opening up lower here at the 28.25 level and then maybe see a pop back up because we are in a channel right now. But if we break this level, all bets are off. I think we're going to the 200, maybe back down to these June lows here. That would be my ultimate guess, that we'll probably see 27.29 or so hit. If those break, and let me tell you, that would not be a pretty picture because you can see there's support here, 27.29, 27.30, going back to March as well. Then you've got these December lows in place. It's a tall order, right? Because you're talking about a move back down into 2300s. Market's currently in the 2800s, so it would be a massive monster move. But there's not a lot of support underneath this market right now. You also have a huge volatility spike going on today. Check out the VIX. This thing's up 23%. We were sitting on the 50-day moving average. We popped a little bit higher yesterday. It wasn't much to really get interested in. But look at it today, 23% higher. We're definitely on pace to possibly challenge this 25 level again that we hit earlier this month. And the VIX, it's just staying very heightened right now. And I think all of it has to do with the FOMC or the Fed with President Trump butting heads with them. And I also think it has to do with the tariff war. Do we see a retest of 36 that we saw back in December? I think it's very possible. I think we could definitely see that if things start to spiral out of control. I think it's going to be interesting to see what happens over the weekend on Monday, whether Trump escalates this even further or whether the Chairman Xi escalates it even more. We'll see. I don't know. But take a look at some of your biggest market movers right now. Apple getting destroyed, and this was one of the best charts coming into today in terms of just, you know, pure strength. It had been moving up consistently over the course of this month, or at least since the August lows. Today it's wiping out over a week's worth of price action, and we're back down. We were talking about 220 it may be going to. Now we're looking at a possible break of 200, and this is not a bullish pattern at all. Now what could we see here? We could see a test of this rising trend line off of 200. That's where it sits right now. If it can bounce there, that would make for an excellent swing trading bounce play. Take a look at Facebook. Big breakdown here. This is not a good clean chart here. This is a problematic chart. This is a chart that says we're probably going back down to 161 because this trend line off of the December lows, it's broken and now it wants to head lower. I wouldn't touch this one. You take its counterpart, Twitter. It went from a breakout potential play today, and I actually traded this one earlier this week. Got out at 41.16 I think for a 2.5% profit. So it was a good trade. But look, it's going from wanting to actually break out to almost basic to creating a double top pattern here. So you have the one peak here, and then you have your second peak right there, and if it loses this 40 level, it's going to get ugly. Then you got Amazon. Very similar chart on Amazon here, where you have support at 1753. It's breaking. It's very similar to Facebook. It's breaking trend lines. It hasn't broken the one long term here yet, which goes back to 2015. If that one breaks, that's going to be very ugly too. 1700's probably going to be tested in the very near future. If that breaks, it's probably going back down to at least 1670s. Now take a look at Google here. You have a uptrend off of the June lows. It's being broken today. It was really a solid uptrend too. In the short term, it had just consistently bounced off of it each time. Today, not the case. It's going right through the floor. That's not good. So I think right here you have a potential retest of the June lows once again, and another FANG stock. It could go all the way down to 1028. It'd be a huge move, but depending on how crazy this trade war gets, that could happen. You also have a trend line here that doesn't give it a much better outlook. It could go to 1058, but not a fan of this. Now Netflix, definitely not liking this one either. This thing just continues to break down. It's got a lot of pressure coming from Apple, from Disney, and everything else. I think its best days are probably behind it, at least for the near term, until it can readjust itself. It's down 5 out of the last 6 weeks. It's ugly, and with market conditions right now, it could get even uglier. 290. Who's to say it doesn't go all the way back down to those December lows from last year? I think it's very possible. Now let's take a look at some of the other companies that are really driving market action today. One, Foot Locker. Look at this thing, down 19% earnings. This is why you don't trade earnings. Okay, this thing, you could have made the case that this thing was setting up for a little bit of a breakout here if it could clear the 43 level, but earnings changes everything. If it's not a good earnings, the technicals doesn't matter. They're not going to respond well to it. And you can see this thing is just a disaster. Down 20%. It's in a free fall. It looks like it's going to go down to November 2017 lows. Don't try to catch a falling knife either, because earnings, they tend to have like a 1 to 2 day slide if they're bad. A lot of people like to try and catch them right now, afraid that it's going to go back up. Without them, don't do that. If it does, who cares? Okay, find another stock that you can trade, but you don't have to force a position on stocks like Foot Locker that's in a complete nosedive. Yeti, look at this double top, man. This is one I was actually targeting today as a potential swing trade. It's down 10%, man. You can't. This is ugly. This is really ugly. Double top. I think it's going at least down to 23, 25 in the near term. It does that and it breaks below that level. I don't know. There's not a lot of price history here to suggest how low it could go. I don't think it's going down to 13 per se, but I mean it could definitely fill this gap maybe at 19. It's not a good chart. It was breaking this declining trend line. The tweets just wreaked havoc on it today, and lower we go. Also, I wanted to say one more thing before I wrap this up. Check out the Share Planner Swing Trading Splash Zone. It's a really good place for traders. On a day like today, it's invaluable, the kind of insights and opinions that you get, not just from me, but you also get it from a lot of other traders that are really seasoned. They've been here, done this. They've gone through some really bad recessions. I've gone through my share recessions and pullbacks and corrections. I got into QID at 30.90, or I was trying to get in at 30.90. By the time my market order filled, it was like 31.09. I sent out an alert to let everybody know that I was getting into there, so everybody was piling in on that, so that was good. So far, it's up over 5%. It's been a great trade for the community. I hope I can see you guys there in the Swing Trading Splash Zone here in the week ahead, and hopefully we can trade this market together. Thank you. Take care. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.